Welcome back to Fiscal Voyage. My name is Felix, and today's video we're going to talk about a company, FedEx Corp, which had earnings a week ago or so, and it had a huge crash, almost 15% or so of market correction. And we're going to go over this stock, FedEx Corp, and see if it's a good buying opportunity at the current price. So first off, we want to look at the FedEx here. Seeking Alpha is going for $268. It's down today at 178, but you can see here about a month ago or so it dropped. Is lower as about 10% 5 days ago. Well, we can't get it here, but you can see here in this day it dropped from 300 all the way to 256, as it's not too far from that drop, and it could possibly go a little lower. I'll show you why technically. But we're going to see if today is a good price. And you can see here the company has a nice yield, of a decent yield, 2.02%. PE of almost 14, lower than 14, which is pretty good. And earnings are expected to be around $19.73. Okay, so the PE is pretty good. Looks to be about under fair value. Normally 15 PE multiple tends to be fair value. So it's close to 14, so it should be undervalued. So now we go to fast graph here, and we're going to look at fast graph. You can see here the company is cyclical, and there's times where earnings are flat or negative. You can see here in 08 and 09 had negative 13% and negative 36% in earnings growth, and then in 2013 it had a negative 5% earnings. And then in COVID, negative 40%, and then 2023, negative 27%. So there is times where earnings are earnings do fall, and pretty significant here, you know, almost 30%, 40% here, 30% or 40% almost over here. So it does fall, but overall the company has been growing earnings at a compound annual growth rate of 9% over this 20-year period. And you can see here analysts are expecting double-digit growth in earnings for the next 3 years. So that's very interesting. So we put the price back in the chart here, and you can see here during this 2022-2023 time period was a great buying opportunity, and I actually bought shares during this time period. I'm up around 70%, but I'm interested in buying more shares. But I tell you where I'm interested in buying more shares, and it's not at the current price. I'll show you exactly where I'm interested in buying shares and why later in this video. But overall, right now we see here that over this time period, around 8 years or so, you can see here it is fairly valued based on the fast graph. It has a normal multiple of 14.25, and right now it's at 14.78. So it's slightly, or depending on how you want to look at it, using the 15 multiple or the normal multiple, the fair value ratio multiple of 15, or the normal PE ratio of 14.25. So it's right in between that. So it's a good indicator that the company is fairly valued, and it's not bad if you wanted to open a position at FedEx here, and I'll show you why with technically and with other analysts. But over here you can see here it has an earnings yield of 6.77, almost 6.8, so it's good. I like to see that 6.5 or higher. Has a BBB credit rating, so it's investment grade, and the long-term debt to cap ratio only at 53.4, so it's pretty decent there. So you can see here forecasting. If we go to forecasting here, you know, they're expected about 14.3% in earnings growth for the next few years. Long-term growth around 13.7. So you can see here, it, you know, if it took revert here, you know, you could have a 15-60% annual rate of return, you know, for the next 3-4 years, 5 years. So that's very nicely. And we want to make sure the dividends are covered. If we look at operating cash flow, the dividend is well covered in operating cash flow, as well as free cash flow. The dividend is well covered. There has been time where the company wasn't able to cover the dividend with free cash flow, but that didn't stop them from continue paying out the dividend, because operating cash flow continue to pay it. And if we go to the dividend increases, you can see here in 2020 and 2021 they did kind of have a freeze here for about 2-3 years, but overall this company has been growing dividend very, very nicely, double-digit rate. The most recent increase in 2024 was 9.6%, so that's great. So I'm kind of expecting kind of the same thing for the dividend increase. You can see here maybe two more quarters of $1.38, and then we should expect a nice double-digit increase in dividend because they have plenty of cash to pay out the dividend and pay out. The payout ratio is only based on adjusted earnings, only expected to be around 27%. So they have plenty of room to have another double-digit increase in dividends. So this is why I like this company a lot. And with FedEx, people's going to continue to use online purchasing. So there needs to be something in the middle to send these products together to the hands of the consumer, and FedEx and UPS are how they get to the consumer. You can see here earnings again expected to grow double-digit rate. And now we look at Morningstar. So Morningstar has an update this last price here, $300, but you can see here it's currently at $270. But they have a fair value estimate of $261, so it's kind of slightly overvalued, but way better buying price than how it was before that, around $300, and they still gave it a 3-star fair price around that period. Other things I want to look at here, you can see here other competitors. Here's UPS around 150 fair value, and it's slightly undervalued, and I agree with that statement there. And if we go to CRFRA, it gives it a whole rating. Obviously this one has the right price, or more or less, but it gives it a price target at 285. It has a 3-year projected earnings growth of 20% with quality ranking of A-, which is all good there. And you can see here earnings are expected based on CFRA analysts to grow year over year from 2024. You can see here $19.90 for 2025, and 2026 $23.75. Another thing here, you can see here they give a fair value calculation of $320, so it gives it a high fair value rank, which is real good. And price to sales here, you can see is lower, slightly higher than 23 and 2022, but lower than 2021. So it's kind of like in that range there. The PE ratio more or less in line. You see, remember here on Fast Grab, 2022 was a great buying opportunity for this company. You can see here it got as low as around 150 price per share. So that was a great buying opportunity. And I own shares around like 160 or 170. So I'm up almost 50% there. I have a nice position size there as well. But I would like to purchase more shares. But we're gonna go over the charts here, and I'll tell you why. Right now I'm gonna probably hold off. So if we look at the 3-month chart, I like to look at 3-month and the monthly for long-term investments. So you can see here we have kind of like strong resistance in this area here, right there. I hit 320 and it dropped significantly to that 150 mark, and then it came in this area again, and now it's dropping. I would like to buy more shares around this $200 area. You can see here it bounced over here, bounced during COVID in that area. They went lower, but even if you purchase at like 140, you've done pretty well because it shot up to 320. Then it bounced here again around the 160. So I'm looking to buy around the $200 area. This is where I really would like FedEx to fall down to, around the $200 area, and I'll be buying more shares of this company because of this moving average on the 3-month. And you can see here it supports it very, very nicely. And at current price, like I said, it's fair value. So if we get it around $200, it's going to be undervalued and high quality company. So that's why I'm interested in buying shares at $200. I actually have an alert here on Thinkorswim. You can see here $202.84. So that's where I have my alert to see if it falls there. Maybe it gives a little spike there, purchase shares and then heads higher. So we'll see what happened there. One thing I could do is sell puts, but then I'm obligated to buy 100 shares of this company, and at around $200, that's going to be around $20,000 in shares. And I don't have no positions around $20,000. Most of my positions, for the most part, tends to be around 8 to 10 grand per position. So I'm not ready to have one position at $20,000 unless it was like Microsoft or Google, stuff like that, or Amazon. Those are the big companies that forever companies in my mind. I'm willing to put 20 grand in. But FedEx, so I won't be selling puts, but I will, like I said, I have the alert here on $200 because of this moving average on the 3-month chart. Now, if we go to the monthly chart, you can see here the next support area is around this 250. That wouldn't be a bad area to buy more shares also. Maybe a little dabble in shares there. Or if you don't have a position in FedEx, there'll be a good opportunity to buy shares around this 250 area. Because I do think it will come down a little bit. Some news happen with FedEx or the economy in general could bring the stock down lower. So that's kind of what I'm waiting for. But like I mentioned, this is after earnings here. You can see this huge drop. It went as low as from the prior day, almost 17%. You can see there. That drop after earnings, and it did pick up, but it looks like it's just trying to fill up the gap, fill up the order and then head lower. So that's why I kind of have my order set and see what happens with this FedEx. If I could get maybe that $200 or 210, 220 area, and then purchase more shares. But you can see overall it looks good. The company looks good. Earnings are growing. I like that. The analysts are expecting growth. If we go to Yahoo, if we go here, you can see Yahoo gives it pretty good estimates as well. The analysts, they have an average price target at 307, and they have a 5-year earnings growth of 14.3% compounded annually. So that's real good as well. So analysts are expecting earnings to continue to grow. The company looks fairly valued. It's a BBB credit rating, investment grade, decent long-term debt to cap. It's a quality company, long-term, been in business, for a long time. Has not cut its dividend, has plenty of room to grow its dividend, as well as continue paying it out. And that's a lot of reasons, a lot of things I like about this company and why I own shares and why I'm looking to buy more shares, just not at the current price. I would like it, like I said, around that $200 or maybe like $220. I'll put another grand or two into my position, but I would like it more around that $200 area. So we'll see what happens. So thank you guys for watching. Let me know in the comments what you think of FedEx. You own shares or plan on buying shares? Let me know in the comments. And if you're new to the channel, make sure you hit that subscribe button, and I'll see you guys in the next one.